Good morning everyone, welcome to the official channel of Officers at 24/7. My name is Amanjyot and today here we are to discuss the another series of MCQ related principles and practices of banking. Okay, so today we are going to discuss certain questions on principles and practices of banking as we are doing already. So this is our 19th class in which we are going to do MCQs on PPB. Okay, so before starting the session, let me know am I audible to all of you and the PPT is also visible. Are we good to go? Audio is okay, give me a thumbs up. So till then, if you are new to the channel Officers are 24/7, then you can subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you by channel. And if you have not downloaded the 24/7 application yet, then do download the application, because here you will find the MCQs, or we can say the quizzes regarding banking awareness, that is going to help you to prepare for basic banking awareness, to know basic knowledge of banks. Okay, and apart from that, you will be able to find here what are the upcoming batches for your particular exam, whatever you are preparing. Okay, so yes, okay, so good morning all of you. Let's start with the first question, that is asking about negotiable certificate, okay, which we can exchange. Okay, so question is asking a negotiable certificate issued by a non-Indian company. A non-Indian company is issuing a negotiable certificate, then representing a number of shares in a foreign stock that traded on Indian exchange is known as. So question is asking simply that we are issuing, what we are issuing? We are issuing negotiable certificate, and it is issued by non-Indian company. It means it is issued by foreign company. It is issued by a foreign company which is representing a number of shares. It means a foreign company is issuing shares in India. Where it is issuing foreign stock, it means in Indian stock. So when foreign company issuing its shares in Indian stock exchange, what term will be used for that particular negotiable certificate? Is it GDR, is it ADR, is it P notes, is it IDR? Which of the following will be correct? Good morning Shiva, good morning Deepak. Good morning Mahendra. What will be the right answer? So what we are saying, that there is a non-Indian company, non-Indian company issuing shares. Non-Indian company issuing shares. Where this company is issuing its shares? To Indian Stock Exchange. At Indian Stock Exchange. Now this particular negotiable certificate is known as ADR, GDR, P notes or IDR. Ishad is saying D, Deepak saying D, Rajan saying D, Suraj is saying D, Suman saying D. Okay, maximum people are going with D. Tirupa Reddy is saying GDR. Okay, Shiva is saying C. Ravindran is saying C, Madhu is saying A, Kritika is saying C. Okay, no, the right answer will be IDR, that is Indian Depository Receipt. Right answer will be IDR, that is Indian Depository Receipt. So whenever a non-Indian company, or we can say a foreign company, issuing its shares in Indian Stock Exchange, that will be known as IDR, Indian Depository Receipt. Okay, now what is GDR? Let's understand what is GDR. Whenever Indian company wants to issue its shares in the foreign country, in the global market except America. So when Indian company is issuing its shares to foreign countries except America, then Indian company will issue GDR. That is GDR, we are issuing our shares in the foreign market. Okay. Now what is ADR? It stands for American Depository Receipt. When Indian company issuing its shares in American market, then it will be known as ADR. Okay, Indian company issuing shares in foreign market, Indian company issuing share in America, that will be known as your ADR. Okay, or Indian company issuing its shares apart from America except America, then it will be GDR. Now what is P notes? P notes is simply when a foreign investor wants to invest in Indian security but do not want to register himself or herself, then they purchase our securities from the brokers, and that will be known as your P notes. Okay, so what is P notes? P notes is participatory notes. So when a foreign investor do not want to register himself or herself, it can be a corporate, it can be a firm, it can be an individual person, but the foreign institutional investors do not want to register themselves with the SEBI, then they purchase shares of Indian company with the brokers, and that is known as P notes, participatory notes. Okay, and all these are the methods of investment. These are the methods which used by the companies to raise funds from outside the country. Okay, clear? All the options are clear to all? Let me know. GDR, ADR, IDR, P notes, all are clear? So maximum has given the answer D, but some of you have given an answer C and A also. Hona? That is not true. Now let's come to the second question. It is asking about name the account that is maintained with RBI in which government securities are held. So what type of account will be maintained with RBI in which government securities will be held? Is it Nostro account? Is it Vostro account? Is it subsidiary general account? Is it escrow account? Which of the following will be correct? Ishad is saying C. Okay, what about rest? What will be the answer of second question? Deepak is also saying C. Natarajan saying C. Kritik is saying D. Rajan saying C. Hitu is saying C. Okay, so right answer will be your C, that is subsidiary general ledger account. So when we are maintaining, when account will be maintained with the Reserve Bank of India in which government securities will be held, that particular account will be known as subsidiary general account, which is maintained by Reserve Bank, maintained with the Reserve Bank of India. Okay. Now what is Nostro, Vostro account? There are three types of account: Nostro, Vostro and Loro. These accounts are in foreign currency in foreign country of banks. Let's say Indian bank is having account in foreign bank in foreign country in that country's currency. That will be known as Nostro account. If foreign bank is having account in Indian bank in India in Indian currency, that will be known as Vostro account. When a domestic bank is using the Nostro account of another domestic bank, then it will be known as your Loro account. Okay. Now what is escrow account? Escrow account is a third party account. There are two traders, there are two persons who are trading with each other, and mediator became the bank. So when bank becomes a mediator, the purchaser, the buyer will send the money to the bank and the seller will send document to the bank, so that when there is a issue of trust, when there is a issue that you can't trust on the another party because you do not know that particular person, in that situation you maintain an escrow account with bank in which third party will be bank, and bank will completing the transaction between these two persons. That is known as your escrow account. Okay, so right answer will be subsidiary general ledger account, that is maintained with RBI to hold the government securities. Next, who manages government debts in India? Who manages government's debt in India? Debt means simply we are saying loan. So which of the following authority manages the debt of government of India? First is SEBI, second is Ministry of Finance, third is RBI, and fourth is not Ministry of Finance. This option repeated. Let's take another option, that is NABARD, or let's say not NABARD, Ministry of External Affairs. So who maintains the government's debt? SEBI, Ministry of Finance, RBI, Ministry of External Affairs. We know there is external commercial borrowings is also there. What is external commercial borrowings? External commercial borrowings are the borrowing government of India is having from foreign country, from the outside source. That is known as external commercial borrowings. Okay, what will be the answer? Do mention the question number whenever you are answering the question. Okay. C and B. Two options are coming, C and B. C is RBI and B is Ministry of Finance. That is correct. These are two options confusing. That who manages the debt of Government of India, but not that much confusing because RBI is the agent of Government of India. Who is the agent of Government of India? RBI is the agent of Government of India. The selling, purchasing of government securities, maintaining of government's accounts, maintaining of government's debt, everything will be done by Reserve Bank of India. Or whenever Government of India requires loan, then the loan will be given by RBI only. Acha, when RBI gives loan to Government of India, what rate of interest will be used? I have told this in the paid class already. I have explained this in the paid class already. Let me know when RBI is giving loan to the Government of India, what rate of interest will be charged? Third is C, that is RBI. Answer quickly. If you do not know the answer of this question, then just write don't know. So that we will discuss and we will move forward. What rate of interest will be charged by RBI when RBI is giving loan to Government of India? Very good. First is bank rate. RBI will charge bank rate by from Government of India at the time of giving long-term loan. And at the time of short-term loan, RBI gives loan to the Government of India for short-term duration under the ways and means advances. Okay, under the ways and means advances. And in ways and means advances, the rate of interest will be charged, that is repo rate. Okay, so the methods of giving loan to Government of India is bank rate and ways and means advances. But when we talk about ways and means advances, repo rate will be charged under this. Okay, this is the right answer. Okay, next question. RBI on behalf of government issues MSS bonds. That stands for Market Stabilization Scheme bonds. Okay, to mop up extra liquidity, it means to control extra liquidity from the market. This is same as open market operation, but has a significant difference. What is it? So whenever we talk about Reserve Bank of India, RBI has its own monetary policy, right? RBI has its own monetary policy. So whenever RBI makes monetary policy, there are two instruments, that is direct and indirect. In indirect instrument, we have MSS, we have OMO. Total instrument, we have 7 indirect instrument, in which we have market stabilization scheme and we have open market operation. Both are similar. In both the instrument, RBI issues government security. It means Government of India issues its security and given to the Reserve Bank of India, and RBI do the selling and purchasing of the security because RBI is the agent of Government of India. And after doing selling and purchasing of government security, RBI maintains the liquidity in the market. Okay, RBI maintains the liquidity in the market. So when we talk about MSS and open market operation, both are same, that government is giving security to RBI. RBI is selling or purchasing that security to control the liquidity in the market. Now, what is the difference between these two? There is certain difference between these two. What is the difference? First is saying money raised from the market by MSS bond is stored in government's normal account. Second is saying money is not raised by MSS bonds. Third is saying money raised from the market by MSS bond is stored in a separate account known as MSS account, which cannot be used for normal government expenditure, and none of the above. One thing, those candidates who are live in the session, do like the session once. Fourth is C. Okay. Everyone is going with the C option. That is correct. Right option will be C. There is two differences. The first difference is that when we are collecting money with the help of MSS, we maintain that money in a separate account with Government of India. That is a MSS account. In open market operation, we do not have such separate account. Okay. So first difference is that. And the second difference is in market stabilization scheme, public can participate directly, but in open market operation, public cannot participate directly. So these are the two differences between MSS and OMO, which is here we have discussed. Okay, next. MSS was introduced in the year 2004. Okay, do remember the year also. Market Stabilization Scheme was introduced by Government of India in the year 2004. Now next question is, what will be the impact on economy if RBI increases CRR? If RBI is increasing CRR, then what impact will be there on economy? First is credit creation increases, loan becomes cheaper. Credit creation decreases, loan becomes costlier. Credit creation increases, loan become costlier. Then credit creation decreases, loan become cheaper. Now what will happen if RBI increase the CRR? A, B, C or D? What will be the answer of fifth question? Shiva is saying A, Rajan is saying B. Okay. What about rest? Rupa is saying C. Reddy is saying A, Krutik is saying A, Suman is saying C, Irshad is saying C, Vivek is saying B, Hitu is saying B. Banks and monetary to RBI. What you are talking about? Fifth is B, C and A. Three options are coming. See, what is CRR? First of all, do understand what is CRR. All the scheduled commercial banks have to maintain a certain reserve with the Reserve Bank of India. Okay, all the scheduled commercial banks have to maintain a certain reserve with Reserve Bank of India in form of cash as a percentage of NDTL, which will be prescribed by Reserve Bank of India by monthly policy. Okay, so when we talk about Reserve Bank of India, what is CRR? CRR is the cash reserve ratio. When scheduled commercial banks reserve certain amount of money in form of cash as a percentage of NDTL with Reserve Bank of India, that particular reserves will be known as CRR. Okay, this is CRR. This is the CRR. So what is the definition of CRR? Cash reserve ratio is the ratio which all scheduled commercial banks have to maintain with Reserve Bank of India in form of cash as a percentage of NDTL, which will be prescribed by Reserve Bank of India. Okay, so if RBI is increasing CRR, now let's say if RBI is increasing CRR, then what will happen? If RBI is increasing CRR, banks have to maintain more reserves with CRR, with RBI. When banks are maintaining more reserves with RBI, what happened? The banks will remain with less liquidity. Banks will remain with less liquidity. Bank will have a less liquidity then. When banks have a less liquidity, bank will provide less loan. Loan will be provided less by the banks. So when loans are provided by bank is very less, it means the credit creation will decrease. So credit creation is decreasing in the B option and the D option. Okay, when RBI increases CRR, banks will have a less liquidity, so banks will provide less loan to the public. Okay, now when banks are giving less loan and RBI has increased the policy rate of monetary policy, so this loans lending rate will increase. This loans lending rate will increase. It means at high rate of interest, less loan will be provided in the market. So credit creation decreases in B and D option. Now let's see loans. Here we are saying that loans are becoming costlier. So B option is talking about costlier, C option is talking about cheaper. So it will not be cheaper, but it will be costlier. So right option will be B. Okay, right option will be B. Clear? Let me know this concept is clear. So whenever RBI is increasing CRR, banks have to maintain more reserves with Reserve Bank of India, and banks will remain with less liquidity. When bank have a less liquidity, bank will provide less loan at high rate of interest. That's why credit creation will decrease and loans will become costlier. Answer quickly. Clear to all? The concept is clear to all. Let me know. This type of questions can be asked. This is the effect. Now, what effect will be there of increasing CRR or decreasing CRR? or it can be asked for the any indirect instrument also, bank rate, repo rate, reverse repo rate, MSF, it can be asked for them also. Okay, now next, which of the following is helping the banking system in sharing the information about the credit history of individuals? So question is asking that which of the following is helping the banking system, is helping the banks to know about the credit history of individuals. Let's say where you are a banker, okay, you provides loan, you issues loan, you prepares the loan document of the customers. Okay, in that situation, what we are saying, in that situation you have to check the credit history of the customer. And when you are checking the credit history of the customer, what you have to do? You have to check a certain reports about the customer's history regarding loan repayments, regarding credit cards, everything you have to check. And which of the following institute help you to check that particular credit history of individual person? Is it same in SLR? Yes. If SLR is increasing, then same conditions will apply on SLR also. Okay. But SLR is different. The definition of SLR is different. In SLR, banks will maintain reserve with themselves in form of cash, gold and securities. Okay. So SLR and CR are different with each other. But the conditions of or the impact, if SLR increases, same thing will happen. Okay, Vivek? Okay, sixth is everyone is saying B. No, some are saying C also. B and C, two options are coming. It is very simple question. You take credit history from Credit Information Bureau of India Limited, that is CIBIL. So CIBIL is a credit rating agency regulated by SEBI, and it provides the credit history of individual now as well as for corporates. It's also provide credit history for corporates now. So first of all, CIBIL is the credit rating agency. It provides rating to the individuals on the basis of their credit card repayment and a loan repayment. Okay, so the right answer will be your B. Next. The Banking Ombudsman Scheme 1995 was amended in. The Banking Ombudsman Scheme 1995 was amended in which year? 2000, 2001, 2002, 2004. What will be the right answer? Okay, so Cheetah came today. Don't know, it's okay. So seventh is C and D. C and D, two options are coming. Okay, so the right answer will be your 2002, that is C option. Banking Ombudsman came in the year 1995, and in 2002 it was reintroduced in 2002 and 2006. In both years, Banking Ombudsman was reintroduced. Okay, now this Banking Ombudsman is known as Integrated Ombudsman Scheme. So we had Banking Ombudsman Scheme for NBFCs, Ombudsman Scheme for Digital Payment System. All these three was integrated by Reserve Bank of India. Now it is known as Integrated Ombudsman Scheme, but it was introduced in 1995 under Banking Regulation Act 1949, and in 2002 and 2006 it was reintroduced. Okay, next. As regards deposit insurance, which of the following statement is true? So you have to answer which of the following statement is true. And we talk about deposit insurance, it means we are talking about DICGC facility. Now what is DICGC? We have already discussed, that is the subsidiary of Reserve Bank of India. So DICGC is the subsidiary of Reserve Bank of India, and these subsidiaries provide insurance to the banks on public deposit. Okay, that's you have to answer. So first option is saying insurance cover for deposit demand and term up to rupees 1 lakh is available. First option is saying. Okay. Second is saying insurance cover is provided by general insurance companies. Third is saying insurance premium is to be paid semi-annually by the banks and not customers. So which of the following is correct about DICGC? Answer quickly. Anil is saying D, Rajan is saying D. Kondapalli is saying D, okay. What about rest? Yeah, so right answer will be D, that is only third option is correct because it is 5 lakh now. From February 2020, it became 5 lakh, not 1 lakh. So 5 lakh claim will be given to individual customer by the DICC, and it is not provided by General Insurance Company. It is provided by the subsidiary of Reserve Bank of India, that is DICC. So only third statement is correct, first and second is wrong. So right answer will be D. Okay. Now let me know, out of 8 questions, how many questions answer you have given correct? Out of 8, how many answers you have given correct? And do like the session immediately. Okay. Now next thing is, English medium batch is already running. It is started on 26th of July. From 1st of August, we started having conceptual classes. And also PPB individual batch also started from 1st August. So if you want to enroll in any of these batch, you can go to the Adda 24/7 application and you can use a code that is Y496. You will get maximum discount 78% here on these products. Okay, so let me know how much you have got out of 8 questions. So last but not the least, if you are new to the channel, do subscribe the channel Officers Adda 24/7 and also press the bell icon so that all the upcoming sessions notification will be given to you. And do count questions every time whenever we are practicing MCQ, that how many answers you are giving correctly. It's okay, there is no negative marking in your exam, but still we need to make sure that we are answering more and more questions correct. Nishan Singh 7, Vijay Lakshmi saying 4. It's okay, we have time, we will cop up with this particular marks. Don't worry about it. Okay, so that's all for today. Thank you all for joining the session. Let's meet in the paid class. Thank you all and stay safe.